Sandeep, hi, good morning. So much to talk about. I mean, there's Trump, there's trade wars, tariffs, the dollar dynamics, US equity markets getting a little bit shaky right now. And for us also, the Nifty already at an 8-month low, and I'm not even talking about the damage to individual portfolios and, concentrated small and mid-cap segments. Tell me, as an Indian investor, how is it that you should actually, tune your psychology right now, more importantly?
So if you recollect, I have been talking about last year, the biggest risk was the expectation risk, because last 4 years, right from 2020 till 2024, we have seen extraordinary returns. So expectation level was really high. Okay. And these correction, whatever we are seeing, is a very common correction, even in the bull run, or even if I call it structured bull run or cyclical bull run sort of thing. Also, you do get these 15-20% correction, even sometimes even more also. What is very important is the absolute and relative thing, because we got used to certain outperformance, got used to certain absolute returns, and that's the reason I think the pain point is much more. And obviously, at the peak of the cycle, the risk appetite is highest. The investor confidence, everybody is a long-term investor, and maybe a few months when it shakes everybody. So we have seen extreme last year. Now we are going through other side of the extreme, and that's the way your maturity comes. If you have seen cycles, how you manage that particular crisis, how you deal with this situation. And that's the way I think, a good amount of negativity is there. The buy on dip thesis has gone completely, is completely sell on rise. People are very, very, cautious sort of thing, if I have to call it the bullish capitulation, is also the thought process also capitulated. It's not only the position. So that's a typical signs that you are coming closer to a bottoming formation, which is there. This is what we wrote in our fact sheet. At least on the broader market, NSE or BSE 500 is giving you some signs that, we are coming closer to bottom. So nobody has bought exactly at the bottom and nobody has sold exactly at the peak. So I think time has come to nibble into it and see what is very important to understand right now. The biggest worry when Trump took oath or post 5th November was the dollar. Okay. The dollar index has rallied sharply. Now, if you really look at right from his second week of January, dollar has actually corrected against not only the emerging market currencies, corrected against developed market currency. So I think for us, the biggest good news is that DXY is also broken 106 mark also, which means this is a very positive construct for the emerging market. I'm not talking about even in India, because we are part of emerging market basket. If emerging market does well, we are by default beneficiary of that. So currency is in your favor, which was the biggest perceived risk for most of us. And I still believe that from a medium term perspective, the risk is not over. But from a very near term perspective, it is showing amazing signs of weakness, which is very good background. Second important parameter is the crude. Okay, being a net importer of crude sort of things, then we are also beneficiary of the weak crude prices. Gold has been very high, which is again good news for India, where because the wealth effect which is there, when your holdings are moving up, your wealth is moving up, then you have a different level of conviction and confidence. So I think a lot of things are in favor of Indian investor. I think some amount of mental balance is required right now to deal with this situation. That's the way I will say, I don't think up to that extent we are negative, up to that extent the way people have given up. So I think I'm a very selective buyer, even in the small cap. So we are actually looking for opportunity to participate now rather than getting too much stressed out what is happening to the global markets.